Everyone can do a great job in using a fact finder and gathering information and plugging into a software tool, and it kicks out this report, and you deliver that to the client and you say, here you go. But do you actually understand the trade-offs and the choices that go into the calculations to get to that outcome? And that, to me, is the difference between advice versus sales. I think an advisor in the future needs to think about how to get people to be more engaging so that we're not just having relationships through screens.
What are the habits or the things that you think are really important to be a high performer in this industry?
I would say it's two simple things. Number one, it's setting structure around your day and to say, what do you want to accomplish today? And what are the objectives that you want to have for any given day, week, or month, or quarter, and sticking to that. And I think then the other part is...
Okay, welcome everyone to High Performance Financial Advisor Podcast. Today I'm joined by Brian Vendig, who's the president of MJP Wealth Advisors. I'm going to try and name some of the achievements, but originally worked at a Big Four, then went to a venture capital firm, Forbes Best in State Wealth Advisors, top 200 RIAs, ones to watch, 25 years in, so experience across finance, venture capital and accountancy as well. Which has been on Bloomberg, Barron's, Fox, CNBC, Yahoo Finance, Reuters, I believe, NBC, and finally, the pinnacle of your achievements there, Brian, is now being on High Performance Financial Advisor Podcast. So congratulations on all this. Did I miss anything or get anything wrong there, Brian?
No, that's great, Tony. I appreciate it.
The first question for me is, how have you achieved so much in what seems a short space of time? You don't look as old as me, Brian, so it looks like you've achieved a lot in a short space of time. How have you done that from a motivation perspective and maintaining those standards for us?
Yeah, no, I appreciate that. I think for me, just to tell a little bit of a backstory to get to that point, having a diversified professional experience before coming to the financial services industry, I think helped to clarify some of the things that I like to do, some of the things that I don't like to do professionally. And at the end of the day, I realized when I was in a high-level corporate finance role in a global Fortune 150 that I really like to help people. And I wasn't really getting a lot of calls from shareholders of that publicly traded company. So in making a transition to the wealth advisory, wealth management world, really just aligned my personal value statement with what I'm doing on a day-to-day basis. And I think just from that, on a personal level, that's motivational because you can see the impact that you make in people's lives, and that rubber band kind of snaps back a little bit faster than it would be in a larger global corporation. Now, on the flip side, I had a great mentor that helped to set me up for success. The founder of our firm, we went through a business succession plan, but I really spent a lot of time with him before even meeting with clients. There was already a great team that existed at MJP Wealth at the time. So there was a foundation there, but it was really how to work with the team, how to invest in myself personally, to then redefine exactly how we want to help people. How are we going to define processes? What types of things do we want to offer as solutions? What are our clients saying? And when you put that all together, then you kind of create your own value statement, no pun intended, Tony. And then things kind of, start to set their wheels in motion. So once we kind of did all that work, I would say, look, I've been, in the industry for 14, 15 years. The last 10 years, our business has grown 10x in 10 years. And it's all just based on, I think, wanting to do things the right way, helping people the right way, and making sure you have that appropriate environment around you to be successful.
Amazing. Brilliant. Because it's quite an unusual move, isn't it, to go from sort of accountancy to financial advice. And obviously, it's not too many people want to do that. I get a lot of people asking me how they can get into financial advice. And it's not always, for anyone that might be external to financial advising and wanting to get into it, how did you do that? And what advice would you give to someone who's considering trying to make that move similar to you did?
I think for me personally, it was just, I was in certain roles that gave me a sense of how businesses are run, an opportunity to work with a team that started up a business, within a corporate backdrop. Spent a little time in venture capital, which helps to understand valuations, cap tables, motivations on why people invest. And I think it was just a collage of experiences where in the background, I was always interested in new things about the financial markets, but then just gave me an opportunity to apply it a little differently. At the same point in time, and the majority of the time that we spend at MJP Wealth Advisors is that we provide our version of a family office service. So yes, investing is the foundation to improve the probability of capturing objectives and goals or managing risk short-term, long-term, as we all know. But at the end of the day, people have questions. People have things come up in their lives that change. There's different opportunities that present themselves on a personal level. So we spend a lot of time with our clients going through their own kind of life cycle plan and then relating it back to the investing. So I would actually say it was a lot of those professional experiences in the past helps me give better advice to people today because I've kind of been there before. I've lived it. I've seen it. And it kind of relates to not only the asset allocation approach, but helping someone through a planning decision or a life cycle decision that they're trying to make.
I think there's two areas I'd love to cover with you today. First of all, Brian, is obviously how you maintain high performance personally as an advisor and what that looks like, but also later on about, MJP in terms of how you create a culture for advisors to perform really well. But it's obviously the first part then. So just looking back at you, what are the specific things that you've done, you think, looking back and as your career as a financial advisor that have got you to the awards and the performance? What are the habits or the things that you think are really important to be a high performer in this industry?
For me, and again, going back to, the transition of experience, I came into the industry with zero clients, zero AUM, and kind of had to build things up. I think the first part is just being intellectually curious. You have to check your ego at the door and say, look, there's a lot of things to learn, a lot of things to research. Did a lot of reading, asked a lot of questions. Like I said, I had a great mentor that helped me get there. So that was the foundational part. But I think once you kind of move past that, it's really, I would say it's two simple things. Number one, it's setting structure around your day and to say, what do you want to accomplish today? And what are the objectives that you want to have for any given day, week, or month, or quarter, and sticking to that. And I think then the other part is the environment that we have at the firm. We've made a lot of investments in people, process, and things. So it's not that I'm successful; it's the fact that our team that is around me, the firm, we're all working together to get to these same objectives, and we're making sure that we're always continuously improving. So I wouldn't necessarily say it's about myself; it's also more about the environment. So going to your other question is, I've worked at companies that had 136,000 people globally to companies that had 100 people spread out across the country. So I've seen from an experience point of view, cultural design, or organizational design, cultural process within a company. And I wanted to set up a firm where we could pivot between the things that are great about a big company, but also appreciate the things that are great about a smaller company and bring those two things together. So as a consequence, we have a very horizontal organization. Everyone works together as teams, as a team. Yes, advisors work with their own individual clients, but at the end of the day, everyone kind of knows what's going on about every client. And we're all kind of working together to make sure that we're delivering on the things that we're supposed to do, but also be there for clients when questions come up. So I think it's striking the right balance between people, process, and things, and how you structure your day.
Yeah, perfect. So you mentioned that you've sort of grown 10x in 10 years. Is that right? Is that a combination of advisors producing more revenue and being more successful from the environment you've created, and some hiring, or is it where's that growth come from, I guess, and how have you done that?
Yeah,
that sort of 10x in 10 years, because that's pretty impressive.
I'll summarize it maybe in three ways. Number one, I run a very diversified business. So there's a component that's individual and family wealth. We've been 338 fiduciary advisors for defined contribution, defined benefit plans. And then there's also a channel of relationships that we have outside of our advisory business. And in each of those three categories, that means we're getting, referrals from centers of influence on an ongoing basis. I think most advisory firms grow with a majority of their new business coming from existing clients. So that's been very consistent over the years. Having a separate employer-sponsored retirement plan business gives us the ability to meet various organizations and individuals all across the country. And at the end of the day, we focus very consciously on our clients so that they end up being advocates of us, which then helps our brand grow as well across the country. Now, to be perfectly transparent, the number of people that we have on our team today is double that in what we have in size 10 years ago. So part of the growth was adding additional advisors, additional client service professionals, which just naturally caused organic growth. It wasn't us going out and acquiring another company and kind of tucking them in, and then those numbers just continue to compound. It was literally, and not to sound too cliche, but it was literally just growing one relationship at a time.
Yeah, perfect. Okay, sounds good. Sounds good. So you personally, then, what when you set out to be an advisor, you made that move. What was your big goal? What I tend to see with a lot of successful people is they've got this big goal that they're working towards, and that keeps them moving forwards and keeps them motivated all the time. What was your big goal, and have you got there, and what's the next big goal for you, and how important is that in success in your eyes?
Well, I think the way I thought about it in the past was I saw that there was a lot of things that our firm did for clients, but people didn't know about it. So I wanted to set on a path to say, look, here is this company that was started in 1981, in the general Hartford area of Connecticut, where people in that community know of us, but they don't know of us across the state. They don't know of us across the county. So I really wanted to build out our brand awareness. So we rebranded the company, and then we went on a path of trying to be recognized for all the things that we do, but also do a better job articulating how we serve our clients as well. And I think the motivating goal was to say, look, we're not going to be the largest advisory firm in the country. We went from 120, 150 million in assets to now we're around 1.5 billion. And that's still small as compared to other firms in the industry, but yet we still have a presence of being, recognized, nationally by these independent third-party rankings and goals, as you mentioned. As a firm or personally, we're in the national media talking about the markets and the economy, and now we have clients all across the country, and people do. When I go to industry things, they are aware of the name. So I feel like that was what I've been striving for, and what the next step is, I think, is really just trying to share that message with others so that, and I relate it back to your business and what you do. It's really getting that message out there to let advisors know that there's a place that exists where you can be a fiduciary. You have a lot of tools and things available to help your clients. You can advise in a way that you're comfortable, that's not focused on high pressure sales and not focused on, key metrics that have to be met to get compensated for helping someone, but make it more relaxed, make it more real. We are in this business to make people, I think, have better lives or have better choices or help to overcome challenges or just have more efficient decision making, whatever way you want to articulate that. So to me, I think the next step is just trying to take this to the next level and being a mentor for others as it was for me. And also, be aware of trying to help others have succession plans or try to help others have a way to make sure that their clients are taken care of as their personal goals change down the road.
Love that. It's a really different world, isn't it, as we know, from pre-COVID. I look back at now and pre-COVID and think, I was going into an office 8 o'clock in the morning till 8 o'clock at night. And if I was leaving early at 6, people are, working from home, people do the working from home kind of thing, So, but I think to get the best out of people now, you need that environment that you've just described there, because it builds trust and builds loyalty, I think. Whereas actually saying you've got to be in the office and driving KPIs now, actually seems to demotivate people, if anything, can go the other way, doesn't it? So the way that you got someone to perform 10 years ago, I think, from what I see, is very different to how you do it now. Would you agree with that?
Yeah, I agree with that. I mean, where we've been successful in hiring advisors to join our firm over the last 5+ years is really getting into what motivates them. What is their personal value statement? What are they trying to achieve for their career? If they have a segment of clients that's different than the majority of the segments of clients at our firm, I say that's a good thing, right? That's, we always preach diversification for our clients' portfolio. Well, I also preach diversification, within the business on people that we work with, or where advisors have professional experiences, or where advisors come from. It doesn't have to be a one size fits all. It's just, what's the core that motivates you? And if you create the right environment, I think, where people work together and they want to work together around that shared value statement, that improves the probability of success, Tony. When you have people work in silos, or, one person having, this type of goal and someone else having another way to do it, and you can't get all on the same page, maybe success looks great externally because the firm keeps growing, but internally it's chaotic. So I think what people are looking for these days is something that's flexible and adaptable. But at the same point in time, I think people are taking more notice to say, how do they connect with the culture and the organization? Because to your point, if I'm not seeing you every day, or you're busy and you come into the office once a week because you have, 20 meetings with clients throughout the week, which is great, you just want to make sure that everybody's on the same page, and there's a mutually beneficial level of culture and trust in how we're all working together.
Yeah, amazing. So you mentioned about you look for people's motivations, and obviously when you interview and you go through that process, when you look at sort of the individuals or advisors that have joined that have performed well, are there any standard ones that you know that relates to someone who's going to perform well, I suppose, in terms of the way they think, the way they act, the way their belief system, whatever it may well be? Are there any common factors that you see in performing advisors, whatever performing means?
That's a great question. I think to summarize it in a couple key bullet points. Number one, does that individual have the ability to stay focused in organizing their day properly? I think that's super important. When you think about the role of an advisor, the important part is that service part, making sure that you're staying on schedule to be available to meet with your clients, make sure that their questions are being met, you're checking in, and you have a process where you're being proactive about that, not reactive. But at the same point in time, you also have to think about growth. And in this business, if you don't grow, you die. And that's just because you lose leverage to be able to offer things for your clients. If you can't grow in experience, if a firm can't grow from an AUM point of view. So being able to structure your day to say, okay, great, I met with these people, but I got to also make sure that I'm putting myself out there and telling a story, finding other people I want to connect to, that I want to work with, that will create a great mutually beneficial business relationship. So I think organization's key. I think the other thing that's key about a successful advisor is they actually can give advice. And I know that sounds cliche. Yeah. What I actually mean by that, Tony, is everyone can do a great job in using a fact finder and gathering information and plugging into a software tool, and it kicks out this report, and you deliver that to the client and you say, here you go. But do you actually understand the trade-offs and the choices that go into, the calculations to get to that outcome? And if someone starts asking you that second or third level question, can you really answer it? And that to me is the difference between advice versus sales, where if you can help someone get through that decision tree on various topics, not only with investing, we're talking about taxes, insurance, college planning, Social Security, medical planning, how to sell a business, how to create a succession plan, all these types of things. And you can do that, then I look for people like that because they can stand on their own. Now, I'm not expecting everyone to know everything, but if you have the ability to be intellectually curious and drill down into some of these other areas, that's going to make you a better professional. That's going to make you a better person to someone else. So I think I look for that as well. And then finally, the last part is again, kind of what I said before. What is someone's unique abilities? We all have unique abilities, skills that we're just always going to be good at, complemented with what are your personal motivations. And those would be, I would say, those kind of three general categories that I always key in on.
Right. I love how I think you've been very modest. You haven't really, spoken as highly of yourself. But what are your unique qualities? Just tell us what your unique qualities are that you mentioned there. What are your superpowers?
I appreciate you saying that, Tony. At our firm, we use a couple tools to actually quantify what someone's unique abilities are.
Yeah,
we use some lab profile tests, and for me, the lab profile test that came back that was very unique was that there was a very high entrepreneurial aspect of me where creativity, the ability to kind of synthesize, kind of think on your feet, so to speak, was very strong. But that was paired with a higher level of facts that I need to gather before I can make a decision. Usually those two things are actually at a trade-off. When you have someone that has a very high need to know to make decisions, they're normally not very entrepreneurial. They're not very creative. They're, versus someone who's like, really good from a relationship or really good from a drive and growth point of view. It goes the opposite on how much information they need to gather to make a decision. In my case, my silos are pretty robust in those two areas. And so as a result, I think that has helped me be a better advisor and be a better business owner because I'm always thinking about ways to continuously improve, and clients have questions. I can pivot in meetings and give them an answer and think creatively and of a different solution, while at the same point in time, I'm still trying to get into the nitty gritty to make sure that I truly understand it because I want to give the best advice because I care. And that comes through with, due diligence on portfolio investment options, to a change in a tax code, to someone grappling with a planning decision. I want to think about it as if I'm them. So I guess that those two pillars, Tony, have kept me going in the right direction.
Love that. And this lab test you mentioned, is it a specific one you've created yourself, or is it personality sort of profile? Is it?
Yeah, totally. I'm happy to give a plug to the Kolbe group, KOLBE. They've been a group that we've used for many years, and kind of gives you this type of information to better understand yourself.
I think it's a really, really good cultural move. I've done that in teams of mine in the past where we've all done the test and actually spoken to each other about our results. And it's a great sort of team bonding and understanding. And because I think from what you've said earlier, I think your culture is probably driven by values and beliefs as well, isn't it, really, I suppose? And that comes across in those sort of tests, isn't it, I think?
I think so. And it's also just, look, I don't make one data point, the final determination of someone, but I think what I'm trying to say, or to put it another way, is we want to set up people to have a high probability of success. And sometimes people come to me and say, hey, I want to be an advisor, but then we kind of go through it and we look at like where they are and we put them in that position. And if it doesn't work out, that's okay. There might be another role in the firm that they might be better at. And then they realize for themselves, okay, well, there's a little bit more to it than I thought. Maybe I'm better more in operations or client service or another aspect. And it can also go the other way too, where sometimes people come in on the client service side and then they can kind of migrate over to the advisory side. So these types of things just help to key you in so you set up the right professional development path. And again, I just want, if someone's going to join my firm, I want them to be there long term, and I want them to be set up for a probability of success.
Amazing. So you use that Kolbe test as part of the recruitment process, do you? Is that right?
Yeah.
So you would use it as part of, yeah.
Yeah, you have the initial interviews, you have the resume, and then if you're starting to get really serious on a candidate, I think it makes sense to do the Colby. They get their results, we see their results, and then it creates a nice discussion to say, okay, well, you agree that maybe these are your unique abilities, and these are the other things that if you were here, you might have to focus on, work on, because then it starts to set expectations in the right direction.
I started working with an RIA firm recently, and they asked me to complete one of those tests so they could get a better idea of who I was representing their brand in the marketplace. And I thought that was, again, anything that helps you build a relationship with each other and understand each other is a positive thing, isn't it? I think longer term.
I think you're 100% right.
So the past, present, what does the future of your firm look like, and the future advisor profile look like to be successful in that AI world that we're in or approaching or moving towards? What's your view on? It's a very big question about AI, but my question, I guess, is how will you need to pivot again to maximize the opportunities that AI will bring you and your advisory firm?
I'm going to answer your question in a couple of ways, because I think technology and AI is going to influence not only how advisory businesses organize themselves, but I think it's also going to impact the way advisors have to operate when working with clients. So I think one trend that's been happening in the industry for many, many years is that clients expect more. They expect you to do more. They expect you to be available to deliver on more advice. It's not just about portfolio management. It's about a whole host of other things that you can do to help them. So I think that concept of being flexible and adaptable and available is only going to accelerate, I think, with the advent of more AI-influenced service models or AI-influenced tools that are going to come to us through software that are going to impact our lives. And so as a result, I think an advisor in the future needs to think about how to get people to be more engaging so that we're not just having relationships through screens. And I'm not saying it means that you have to go and meet with someone physically, because if you're in New York and they're in California, that might not be possible. But it's really how to maintain the right type of collaborative and balanced relationship with someone so they can share information with you where you're not just getting information from a bot or a website, and someone is taking the time to actually share information with you than just hiding behind a screen, right? And I think that's the risk of AI, and I'm just kind of calling that out from a way that advisors in the future might have to be adaptable. In the beginning, maybe a younger client could be more used to just, hey, I don't need to speak with anyone. It's just clicks, we'll get it done, we'll send emails, whatever. But as their life gets a little bit more complicated, I think human interaction, human advice-driven services are not going away, and that element will be there. I think from running a business and looking at how technology impacts our processes, that's already happening today. So there are tools that advisory firms, including mine, that are using that are helping to support day-to-day organization around interactions with clients. I think in the future, there's going to be more AI bots that we're going to be able to plug into our software platforms that will help to manage routine day-to-day questions from clients and get them information faster with faster service. I think that's a good thing. I don't think that's going to replace human beings. I think it's just going to help us, manage volume. But I will also say, from a portfolio management point of view, we're already using algorithmic trading. Maybe you could call it an AI kind of centric trading platform for some of our strategies, because the technology helps to ensure that we can do ongoing capital loss harvesting in specific client accounts on a daily basis, and do that across hundreds, thousands of accounts. We couldn't really do that, historically. I mean, you could do it manually, but you're at risk of making a mistake. So actually the technology, I think, is helping our clients get a better tax efficient outcome when trading individual stocks through a taxable account. And that's where I think the concept that I'm talking about is called personalized indexing. And I think concepts like that are going to be accelerated as this technology plays out over the next 3 to 5 years.
Yeah, I mean, I agree. I think with anything new, I think you've always got your sort of, it's the devil and the angel on the shoulder, isn't it? The devil saying it's going to take everyone's jobs, and the angel maybe saying there's lots of opportunities. And I think there's a mixture of both, isn't there? Really, but I think Microsoft did a poll, didn't they? And I think financial advisors were one of the most at-risk jobs in the future. But that just for me, I don't see it replacing. I genuinely believe that we won't be replaced by AI. We'll be replaced by people that can use it well. And I think that's probably the same in financial advice, isn't it, really? If you can use AI well, then you won't be replaced. But if you can't use it at all, then maybe you will. I think that's where it's going. I don't know if you think that's a fair summary.
I think that's fair. I mean, I think back of how the industry has changed over the last 14, 15 years. And the firms that were open to change, that consistently changed, got bigger, got better, got stronger. Firms that say, no, this is the way we're going to do things. This is how we do things. And they didn't really kind of stay pace with the market trends. I think, at the end of the day, it shows. So I think you have to be open-minded to the fact that you're right. There's two sides to every process change. And right now we're going through an innovative change that can have positive consequences and negative. You just need to strike the right balance for how you want to deliver your advice-driven solutions for someone's clients, and then thinking about, more importantly, what are your clients' needs? And if the technology can help to bridge a more efficient connection between those two parties, then it's a good thing. Lean into it, use it. But if it's not going to add value for your client, and it's only going to add complexity to your day, then obviously it's not worth the investment.
Yeah, and I think obviously this podcast is about high performance. I think it's making sure it can increase your performance and increase performance for your clients, isn't it? If you can do that, then you go with it. If it doesn't, then not.
Yeah, and I think for us, the higher performance is it's improved our trading. It's improved the ability for us to be organized and prepared for our clients. And so that means when we're, in both cases, as just two simple examples, we're more focused on the people that we're trying to help.
I obviously prepared some questions before, but obviously been so engrossed in what you're saying, I haven't asked any of those. But at the moment, I guess just going back to leadership and growth, one of the questions I was keen to ask you is, what's been your most important leadership lesson, and how has it shaped the way that you run the firm? Because I think there's a lot. Leadership is very hard, isn't it? You don't get everything right. But yeah, what's been the biggest leadership lesson that you've had in your career, and how has that shaped how you run the firm, is the question I wanted to ask.
Yeah, so I appreciate that question, because I think for me, I'm a very driven person. I set goals. I want to achieve them by a certain time period and then move on to the next thing. And I think early on, as I was kind of influencing and pushing the organization to change, we were going through a lot of change all at once. And for some people that was good, and for other people it was not. And so I think the one thing that I've reflected on and learned over the years is that I might want things to get done faster than maybe reality. And I have to make sure that when I run the firm on an ongoing basis, that I have to have a level of empathy for others on my team, because we're all working super hard together. There's things that always come up every day that are outside of what you plan for when you work with people, or you work in a financial market that we all know we can't guarantee future results. Things happen, and so as a result, be more strategic in the way that we set goals and objectives. And that's why I now use the expression, internally with my team. It's to say, hey, let's all try to work smarter and not harder. And for me, that's a reflective message on myself, which is set goals for the company, but it's okay that the timelines and the achievement on those goals can also shift, because other things are going to come up. So that's and I think that's created it's lowered the stress level at times. It's created more comfort and support, because I want my team to know that I care about them and I appreciate all that they do, and that I'm just not constantly just keep pushing everyone to that next thing. So I think that's something that came with time as we've gone through some growing pains, Tony.
Well, I think what's the saying that I heard? People don't care what you know until they know that you care. And I think just having that and showing that you care about them means that they actually listen to what you say, don't they? So, I think that's a really important trait in a leader. So you've obviously got that in bags. If you were to sort of say why someone should join your business, I guess, what would you say as to, because there's lots of different firms out there, as we all know. What would you say? Why would someone join your business who's probably might be an advisor thinking could be doing better? What's your sort of your mission statement or your elevator pitch as to why someone should join your business?
Yeah, I mean, look, as I said before, I think, we're highly motivated on giving fiduciary advice to make a difference in people's lives and really truly wanting to help. And I know a lot of people say that, but you have to have the culture, you have to have the team, you have to have technology, process, you have to have a true institutional investment management platform that can go from individual securities to the conventional solutions to alternative investments. So we have, we've built out and deliver on every, aspect of being a family office for our clients. But we don't gatekeep that by how much you have in, AUM in your account, and we have a flexible fee schedule to be reasonable in what our clients are asking them to do. So I think, the difference for an advisor looking at our firm is just that you're in a horizontal, team-focused organization with all the tools available to be successful, and we're not looking to create constraints on people. And we want to make sure, like I was talking about earlier, that personal value statement aligns with what you want out of your day. And that message has resonated with a lot of people over the years. We're very selective on who joins the firm, but the quest for attracting talent, as you know, Tony, or finding the right resources to meet certain objectives, doesn't get any easier every day. So it takes time to find the right person, but we're always hiring and we're always looking for top talent that's out there.
I think if you're ever lucky enough to meet a good recruiter, it can be very helpful. But I'm not sure. I might know someone, but we'll work on that one day.
Yeah, for sure.
So I've got my final question before you go, Brian. I've loved having you on. I love your approach, and I always think, would I work for this guy? And I would. I just think that culture of people and doing the right thing and the way that you're doing it sounds great. I've got two random strange questions I ask everybody, really. So if what book would you recommend to a financial advisor who's looking to maybe get to that next level or looking to improve?
Looking back, I drawn a blank now, but there was a couple books that I read that were more kind of focused on like personal wellness and trying to be reasonable with oneself as you're kind of going through a professional development process and a goals achievement process. So I would say, books that are kind of more in that genre where you're really kind of focusing on trying to make yourself the best person to be able to do the job at hand. I think a lot of people read books about like, here's the way to, get a referral, or here's the way to, have, engage with someone. I never read any of those books. Actually, I would say to you, Tony, I have clients who have, when they come to us as a firm, when you tell someone you're a wealth advisor or a financial advisor, the first thing they think about is they think you're a salesperson.
Yeah, they're doing it. Yeah.
That's an unfortunate part about our industry. I think there's like industry rankings that are out there that put financial services industry, well down on the list as compared to others. So I think I focused more on the books that help you understand people, understand yourself, so that you can create collaborative and a collaborative relationships with others. Because I've always had clients tell me over the years, Brian, you are absolutely the worst salesperson I've ever met because you tell me everything I'm supposed to know. But at the end of the day, if you're an advisor, you're not a salesperson.
Absolutely.
If you're a fiduciary, right? Or if you're focused on trying to help someone, there's something in there. Don't get me wrong, but if you're helping somebody and you feel good about the way you're doing it, I think it's really focusing more on yourself to be a giver to others is what I'm trying to say.
Yeah, I get that. And well, I think just going back to the sales element, I think you sell the benefits of your services to someone's life, that you don't sell products, or, it's an advisory led. So the sales element is more sort of being able to talk positively about the impact you can have on people's lives, perhaps. But I'm not sure that's salesy, or just sort of promoting financial advice as a genuine good for people's lives, isn't it? It really is in every way.
Yeah.
And my other one is anything, or a podcast, or anything that you listen to, or in your daily routines that you think are people worth listening to for the same benefit.
When I'm not focusing on portfolios, the markets, and the economy, I think the things that I listen to are actually more comedy, more humor. Just things, totally different genre, just as a means to laugh and have a giggle, on the side after, a long week or something like that. So,
your favorite comedian, Brian? Before, I've got to ask that because I love comedy. I've done a little bit of stand up myself, not very well, but I have done some stand up. But who's your favorite comedian?
Sure. So, I mean, lately my favorite comedian has been Sebastian, who's out there on tour. But in the past, I was always a big fan of Richard Pryor, if you go back, many years, and, a big consumer of Saturday Night Live. So there's a lot of folks that were stand up that went through the program and obviously quite successful afterwards. So, just always a big fan. I mean, I've always loved Jerry. I know that's a big name, but I've always been a big fan of Seinfeld since the 90s and seen Jerry many times.
One of the greatest shows ever made. One of the greatest shows ever made, and Curb and all that. So but listen, Brian, it's been amazing to have you on. I really respect and appreciate what you've achieved so far and what you're trying to achieve. But one of the things I don't know if you did this on purpose, but I don't think at one point you said I, or you didn't say I, like it was all about we. And I think that's an amazing attribute as a leader to have, when it's not about you, it's about what you're achieving together. And I think the way you communicated that today really stood out to me. So I really appreciate you coming on board. I'm looking forward to watching continued success. And thanks for coming on, and thanks for being such a good guest.
Oh, thank you, Tony, so much for the opportunity. Always great to speak with you, and best of success for you. And I hope this video resonates with a lot of people watching.
Thank you for listening to High Performance Financial Advisor. If you found today's episode valuable, make sure you subscribed on your favourite podcast platform so you don't miss the next one. Until next time, keep performing.